Despite over a year of downtrend in Alibaba stock, many investors are still optimistic about Alibaba, and that's understandable because nothing critically bad will happen to the company. Very many businesses are just dependent on Alibaba. I guess right now the main thing that investors are worried about is the possibility of delisting Alibaba from the American stock market. But Alibaba is very popular stock that has high volume of trading, which means broker companies will lose a lot of money if they will not do something in case if Alibaba is delisted from the American market. So probably they will do something, maybe transfer your stocks to the Hong Kong market. They don't want to lose money, obviously. If you're holding some unpopular Chinese stocks such as Vape Shop, then perhaps you have more reasons to worry about. Since this company is not listed on the Hong Kong market and also doesn't have a great volume of trading, so brokers will not be worried to lose money from Vape Shop trading. If you have an opportunity to buy Alibaba stock on Hong Kong market, then of course just transfer your stocks to Hong Kong market and then you can forget about this risk. As an alternative, you can buy an ETF with Chinese stocks, for example, China Internet ETF, and forget about the risk of delisting. The fund will just transfer the stocks that left to the Hong Kong market. So Alibaba looking right now very interesting as an investment, because you can see how much the business is growing last 7 years, while the price since then increased not that much. So it actually looks very undervalued right now. Well, if you trust these numbers, of course, because a lot of investors say that we can't trust Chinese companies' reports. There is no way to actually check if they are true. But we don't have much of a choice except only trust and don't trust. So you can refuse to buy these stocks if you don't. There is another popular opinion among investors that Chinese government favors JD.com over Alibaba, but to me Alibaba is still more interesting because it has higher profit margin, still has higher profit margin despite the regulators' measures for which Alibaba was fined for. Some sellers moved from Alibaba to JD.com, which is why we see weaker than expected Alibaba's earnings report for third quarter and stronger than expected JD.com earnings report. But still, despite all this, we can say that Alibaba's business critically suffered. No, it still has high profit margin. And despite investors' fears, Alibaba wasn't forced to sell its other businesses that now keep developing and keep growing, such as cloud computing. So far, these businesses are still unprofitable, but they are perspective. So to sum up everything, despite the regulators' measures, Alibaba still has very strong fundamentals. It's a growing company, the company is diversifying its business, a lot of businesses depend on Alibaba, it has perfect financial health, and now it looks very undervalued. And Chinese stocks should be performing better next year because China stopped stimulating the economy long ago. If the central bank will show the decrease in inflation, it will likely to start stimulating the economy again. That's all. Thank you for watching. If you are interested in more neutral, detailed, fundamental analysis of companies on the market, you can subscribe to this channel.